You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again for Education Wednesday, the day where we break out all the great educational content for you folks out there in the listening audience. We do a lot of education throughout the week as well, but Wednesday is where we really turn it up to 11. You get your double dose, of course, of this fine program, the premier educational program out there, which is, of course, Options Bootcamp. And then, of course, you get your extra special dose of OPR, a.k.a. Options Playbook Radio. Coming at you later today. Brian's traveling a little bit, taking a well-deserved vacation this week. So probably going to get a fun best of. We haven't done that in a while out there. Got one of the epic episodes that we guys probably haven't heard. A lot of new listeners have discovered OPR over the last year or so. So give you a taste of something maybe you haven't discovered from earlier on in the archives. And of course, if you want to join us live here, ask questions, play along, enjoy the great pro Q&As, options, oddities, everything else we have going on, you got to join the coolest secret club in options. And I have told my people we haven't done it yet, but we do have to put that URL there, /secret club. For now, if you want to learn more, go to theoptionsinsider.com/pro. You get, of course, like I mentioned, you get the oddities, you get the Q&As, you get all the live stuff throughout the week. And then, of course, you get entered to that fun drawing to win the sweet Options Insider Pro Trading Crate. We are assembling the first ones now as we speak, ready to go out the door. We're just awaiting your preferences for your choices there for the educational item and the few others. We'll see if they choose the book of the black-hatted one himself, who is joining me on the program today, none other than Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the program. I know you're excited. I know you're jazzed today, sir, because this is an episode you've been talking about and hinting at and teasing for close to a year, sir. Are you psyched? Are you ready?
I am psyched for psychology.
All right, then it is time to do it. Dan's super mega trader psychology spectacular. Here we go.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody. Going to have a very special episode of Options Drills today. Very special episode of Blossom coming at you here live. We're not going to talk about that weird stuff they would talk about in those episodes. No, we're going to talk, maybe it could be weird to you, I suppose, the concept, the notion of trader psychology. And before we even get into that, Dan, I am curious on a psychological level why you are so interested in this. What is it that really prompted your love affair here with trader psychology, sir?
You know, Mark, I work with a lot of students, and I try and just see patterns and see what holds people back, what makes people successful. And I think we'll talk a whole lot more about this. but psychology is one of the biggest things in trading. Like if someone was to say, what's the most important thing? Oh boy, a lot of things, and they're really all related to trader psychology. You can have all the skills you want, but without that right mindset, it's impossible to make it work.
That is true. A lot of people think the effort and the skill goes into the position selection, the stock selection, the option trade selection. There certainly is a great degree of skill to that as well. But I've seen many traders turn great trades into terrible trades because they take them off too early. They don't let their winners run, or perhaps they refuse to take off a loser and let it just go against them. And then they keep trying to roll and add on other wings, and they end up just compounding their losses and throw good money after bad. So yeah, there's a lot of things we can unpack here. And you're right. At the end of the day, good psychology is really an important level. That's something also very hard to teach. You can't really pick up a book and say, here's the proper way to think. It's something you have to learn and evolve and really experience over time. But hopefully we can point you in the right direction. Let's start with that right direction, Dan. You've dealt with a lot of students over the years that have come across the MTM threshold there. And you've seen, obviously, some better than others. Some have, let's say, more adjusted psychology than others. They're better suited to the game. So if you had to say right now, what are some of those key traits? Someone comes across your threshold, you say, okay, these days they come in virtually. You say, okay, I think this person is going to be successful and this person isn't. What would you say is the distinguishing traits between those two?
Man, Mark, I would say the biggest thing really is just actually taking action. Especially when you're getting started, but really all throughout your trading career. Like, look, you can't make money if you don't invest. If you don't invest in a trade, if you don't invest in yourself, like taking that action. And like the first step, of course, is learning something, making sure that you're comfortable, making sure that you're not going to go in and make an uninformed trade, right? But sometimes people get a little bit hung up on that. And they take the action to invest in themselves, to invest in the knowledge, but then can't, as they say, pull the trigger once it gets to making a trade. And that's not just a beginning trader thing, like that initial action of investing in yourself, that initial action of making your first trade, and then the second one becomes immensely easier, third one way easier, until you make a bunch and then you get good at it and then you want to scale up and then, oh no, wait, I'm a 1 and 2 lot trader. It makes me nervous to do 5, and that kind of stuff gets in your head. And so, yeah, I can answer this question in just one word. Action is what I see in traders that make it versus traders who try and fail or never even get started.
So we hear a lot about FOMO, fear of missing out. You're talking about fear of even doing, fear of getting started. I'm not sure if there's an acronym for that. Maybe we should coin that today. Fear of getting started, FOGS. That doesn't have the same ring to it, I don't think. No, not really. You don't have the FOGS. That doesn't really roll off the tongue. Hey, we'll workshop it as we go along here. But you're talking about skill sets and mindsets, obviously, first and foremost. That's kind of what we're focusing on today. But also, I mentioned kind of earlier, people always come to trading. I think it's all about skill. Clearly, there is some Mason-Dixon line between the two. There is some area for the skill, the analysis, the quantifiable, really, hey, I'm breaking this down. Here's the vol. Here's the historical skew. All these things you can quantify. And then there's kind of the stuff you're talking about here, Dan, the mindset area. So if you had to weight one of those, and you kind of teased it earlier, it sounds like you think the latter, the psychological level, is even more important. That trumps all the quantified analytical stuff.
Yeah. I'll tell you, I mean, first of all, the one thing that I would say here is that the most common trait that I see in our most successful students probably is, if I had to pick one, I would probably say it's a positive attitude and everything that goes along with that, like confidence. And And positive attitude and confidence is kind of a weird thing to talk about with traders, because you can really, you can really kind of skew that the wrong way and really kind of twist it in a bad way if you're not careful. So, like, look, a positive attitude and having confidence doesn't mean, hey, this stock is going to go up because I'm going to will it to go up. Like, that is not what I'm talking about at all in any way. The positive attitude is, I'm prepared. I know what I'm doing. I studied my stuff. I'm looking at these details. I feel in command of, not the market, but I feel in command of myself. And that ties into where I think you were going with part of this is skill set versus mindset, right? People spend so much time on the skill set, and look, you have to, right? You have to, like, you need to understand how delta and theta and implied volatility work and all these things, and you have to have your technical studies pretty down pat and really get it and know where to put your stops. Like, you have to have all these skills, right? But I would say 90% of it really is the mindset as opposed to the skill set. Really having that attitude, keeping the positive in, taking the action, keeping the negative out, that mindset is so much more important than the skill set.
Let's get specific. Let's get some examples in, preferably personally identifiable examples so we can mock them. But like I said, you have a lot of people come across the MTM threshold. Someone came in, maybe they exemplified some of those negative traits you mentioned there. You first identified, then over time, maybe with you guys helping them, maybe with their own exposure to the market, they went on to evolve and become what you consider to be really a successful trader. So give us some of those, maybe their names and their addresses so we could talk about them and contact them, sir.
I mean, I only have credit card numbers and social
security.
Oh,
okay. We'll start with that. We'll start with that. That'll work. That'll work. There was this one guy, like, one of the things the Market Taker Mentoring is most known for is our total earnings domination class. That's probably our best trading methodology, with overall, I would say, clearly our best success rate. And there was a guy who signed up for it maybe about 9 months ago or something, about 3 earnings seasons ago. And he signed up for it. He studied everything and he paper traded it for like 6 months or something. Like, just very, very patiently paper traded it. He kind of hung out in our chat room. He would ask me questions. He would bounce ideas off me, ask if he did this right. Kind of talk with me and with some of our other students who are real successful with it about, hey, this didn't work. Is this normal? Or is this just part of the statistical nature of trading? Or did I do something wrong? Really studied it, put in the effort, and was not even remotely about to give up. And once he started trading with real money, oh man, I talked about in one of our presentations, I forget exactly what his success rate is. I want to say the 6-month period that he first started trading, and this was during the pandemic when things were crazy. I want to say he made 30% in that 6-month period. So an annualized return of about 60%. And like, that's just really proof that anybody can do it. And it's proof of this balance between skill set and mindset, right? Like, I think he was a pretty smart guy, but like, look, I've got literally brain surgeons who signed up for our classes and didn't make it. Like, the smart part is, it's very, very helpful. Getting those skills down, very, very helpful. But he just had this, he was not about to give up. I'm sure when he was paper trading, he got bored, like, I made $1,000 on paper. Man, I wish I was trading with real money. But no, he just waited and he put in his time and made it happen for himself. And let's talk about one of the areas where psychology, I think the rubber really meets the road for a lot of traders out there, which is when, let's say you have a position and it's going against you. Right now, this is where a lot of different psychological factors can really come into play. First off, there's the steadfast belief, going back to earlier, it requires some confidence to do this. Sometimes that confidence could be a little bit misplaced and you end up holding on to a position and maybe even doubling down or adding more because you have this steadfast belief that your initial analysis was infallible. And so there's that aspect to it too. And people often struggle with that. People have asked me many times, what would you say is one of the defining traits of a really successful trader? And I've always said, because it's the thing I struggled with when I first walked on the floor of the SIBO, is being able to cut your losses and knowing when to get the heck out of Dodge. The skillful people who can do that and can do it without the psychological damage and going through the psychological hurdles. Those are the people who really seem to be able to define themselves and set themselves apart from the rest of the trading crowd because they're not having those massive drawdowns. They're clipping those pretty aggressively. And one of the ways I've counseled people in the past, Dan, a starter point to get over some of those psychological hurdles is to do what we've kind of counseled on the show in the past. When you set up a trade, have some rules at the outset to say, hey, I'm selling this put, let's say, in XYZ, and it's 5% out of the money. If the underlying gets to my strike, or if the put premium in this case maybe goes 2x against me, whatever your rule is, 50%, whatever it is against you, you are going to cut it off there. And I find that's a good way to really kind of help ease people in, and without, maybe it's kind of a way to do a bit of an end run around really some of those psychological impediments, but it does seem to be a helpful starting point. What do you think of that approach and kind of leaning on the rules as kind of a bit of a psychological crutch when people are first starting?
Yeah, those rules are extremely important. There's something, I mean, basically what we're talking about here, there's this phenomenon called the endowment effect that was discovered, I don't know what you want to say, but by a guy named Richard Thaler, who is a psychologist who, if I'm not mistaken, won a Nobel Prize in economics. And the endowment effect, it talks about, it's for more than just traders, it's for anything. But when you own something, you have this thing in your possession, or as far as traders go, in your account, you sort of overvalue it. You don't want to let it go. And you see that, like, there's been studies, like you see that with sports teams, hey, we've got this player and, should we trade him for this guy or this guy? And the endowment effect means that, like, he's on our team, and like you rate him higher naturally than what his skills might actually be. And so you see that all the time. And what you suggested, Mark, I think is a great way to deal with the endowment effect. Set that plan. Like, as soon as I make a trade, what I do is I put in my GTC order to take my profit, and I set an alert on where to take my loss, or just put in an OCO. And then boom, I've got my plan set out. I'm not getting emotionally attached. It's set in stone.
This is a more recent phenomenon. This has always kind of existed, but we've seen it just exacerbated and turned up to 11 in 2021, which is kind of the other side of that, which is the FOMO trade. People don't like to lose. Obviously, they want to know when to cut their losses. But it seems like, and it's amplified these days, it seems like people are more afraid now of missing out on whatever, the next GameStop, the next AMC, than they are of actually taking real physical calculable losses in their portfolio. They would much rather maybe lose a couple of percent on, let's say, a put they sold than have GameStop call or GameStop underlying in their portfolio and sell it before it got to its apex, before it got to its high. That, I think, for many people is more psychologically damaging. And it's crazy to me that we're wired that way, but it does seem to be the case that people will talk forever about, how much money they left on the table in XYZ name, pick whatever, Google, Facebook, AMC and GameStop now. I had it, I sold it at 100, it could have gone to 1,000. That seems to weigh on them more than they lost X percent on a particular name. Have you noticed that as well, Dan? And maybe even more so now in this era of just raging FOMO, and how do you counsel people to get around that?
Yeah. FOMO is a tough one, man. And I think it ties in a lot to the endowment effect when it's a trade that you already have on, like, I better not sell it here. What if it goes up more? And it stems from, obviously, like we talked about the solution already for this. It stems from having a plan. And I mean, the best advice that I can give there is like your job is to take money from the market. It's not to buy the absolute low and sell the absolute high. Like, I've been doing this a good 28 years now. And I would imagine I bought the low of the day or sold the high of the day about 3 times in my career. Like, if you're trying to do that, you want to talk about missing out, you're going to miss out on so many opportunities to take profit if you overextend yourself and stay in things too long or get in things too fast. So yeah, that FOMO can be really, really one of your worst enemies for sure.
I find one of the most psychologically healthy approaches to trading, and also one of the most difficult for many people to grasp, is that notion that no one ever went broke taking a profit. I say that to people all the time. People will hit us up. Oh, I had these calls and I took them off, but man, I left so much on the table. And I always write back to them and say, not for nothing, but no one ever went broke taking a profit. You made money on this. The way you describe it, you would sound like you had lost a bunch of money and your dog died. But no, you actually won on this trade. It's a strange phenomenon, Dan. So I think maybe just repurposing it in their own brain and thinking about it that way. Hey, I actually did make money. I actually did win. It's not a loser. It's a hard thing for people to come to grips with these days, Dan. Maybe we need to have a whole separate special on that. What do you think?
Yeah, that's a great idea. I've got that phrase, no one ever went broke taking a profit, in my book, Trading Option Greeks, in a couple of places. And like, I believe so strongly in that. It's really funny. When you write a book like Trading Option Greeks, like, something nonfiction like that, you want to get some feedback from other people. And I had this one guy who was like a PhD in finance read it. And one of his notes were, this is before it was published. One of his notes were, you say no one ever went broke taking a profit, maybe too many times in this book. You should probably think about cutting a couple of those out, which I did because I didn't want to be too repetitive.
That man was clearly an idiot and didn't know what he was talking about. So let me edit your next book for you. I'll jazz it up.
Done deal.
We'll add 3 more per page. No one ever went broke. That, especially now, that is an important thing. It sounds straightforward, listeners, but if you can wrap your head around that mindset, you'll be a lot happier, A. B, you'll actually be able to take more profits than sitting there with all this FOMO saying, oh, this could be the next AMC. I need to hold on to this madness. And then what ends up happening is that inevitably, whatever it is you're trading probably reverts and moves against you. And maybe you end up taking a loss because of that stupid FOMO when you had a profit and you were sitting on it. Doesn't mean you have to take all of it off. We talked about scaling out of positions in the past, and that's another great way to kind of deal with the psychological ramifications. You have a big trade, it explodes aggressively in your favor. You're super happy. You're sitting on some decent profits, but now also maybe you think there's some more to come. You got that FOMO. It's kind of percolating in your belly there. It's starting to eat away at you, the enemy that is FOMO. So what can you do? One of the first things you could do is start scaling out a little bit. So, you take some of that off. Maybe you have a 10 lot of a particular call in XYZ and it's blowing up. And now you've exploded. You've made 200-300% on that trade. You take a couple off, take 2 or maybe 3 off. Now, hey, you've made money on that trade. You've locked in some profits. At the very least, maybe you sold enough to cover your initial outlay. So the rest is all gravy now. Again, you have to be willing psychologically to take that step, because taking 2 or 3 of your 10 lot off, oh my God, there comes the FOMO again. What if it explodes another 1,000%? You need to be able to take that step proactively and realize that A, it's the smart thing to do. B, it's the psychologically healthy thing to do. Take some of those profits, take some of that risk off the table. You still have some on in case the underlying keeps moving, but you also have taken away the risk and you've locked in maybe some profit, or at the very least gotten your money back on the trade. So there's no risk to you anymore. Dan, is that another way you like to approach it with a specific technique on the psychological front, is to help people work on scaling out of these positions so they could still have some access to feed the FOMO, but also they're taking some profits off the table?
100%. Not only is that a way to tactically boost your P&L in the long run, because you are taking profits and locking them in, and basically whatever you have left, you effectively have at a better cost basis. But it makes you psychologically feel so much better because, okay, I've got all this risk on, I'm up so much. What should I do? What if it reverses? You take half of it off and now you've locked in that profit, or you look at it as, the rest I've got on is at a great cost basis. You just feel so much better and you're not paranoid about making a mistake. Those fear and greed demons don't get into your mind as much, and you trade so much, better, just so much smarter.
And you mentioned the endowment effect. Obviously, this is an area you've been focusing on and studying for some time. Do you have any interesting articles or books or research you've come across that have helped you that you think maybe would be beneficial for our listeners out there, Dan?
Yeah, I mean, I read a fair amount about this kind of stuff. Like a really great book to get started because it's such an easy read is a book that I just finished called The Undoing Project, which is a Michael Lewis book. And if you've ever read anything by him, his books are so darn interesting and like really, really like deep into the subject matter, but pleasurable to read. You just crank through it because it's such a fascinating story.
Interesting. Is that a new one? I'm not familiar with that one.
Yeah, I think it's a pretty new one. I think it came out within the last couple of years, maybe.
I'm looking here, 2016. I guess I must have missed it. I love Michael Lewis like everybody else. I read all of his early stuff. Liar's Poker was, God, how many times did you play Liar's Poker on the floor of the SIBO, right? Everyone wanted to pretend they were in that book, right? There were a couple of pieces of fiction, or in this case, nonfiction, that really shaped going back to the psychology of the young trader who walked onto the floor of the SIBO wanting to live this life. First off, of course, it was Wall Street. Everybody wanted to be Gordon Gekko, not Charlie Sheen. Everybody wanted to be Gordon Gekko, so they could quote all the lines from that movie. B, of course, was Trading Places. And you always heard, turn those machines back on and all those lines. And the third one was Liar's Poker. Everyone stood around with their dollar bills or whatever, 20s or 100s or whatever it was, and they played Liar's Poker in the quiet. Everyone wanted to relive those early heydays of Solomon out there. But I haven't checked out this one. I'll have to read it. I will say Michael Lewis, I kind of fell off him after Flash Boys because that book was kind of riddled with some inaccuracies, and I was kind of surprised. That's a conversation for another day, but I will check this one out. The Undoing Project, A Friendship That Changed Our Minds. It's about Israeli psychologists. Listen, that's interesting. Again, going back to the theme we have. Dan, you shared with us a kind of a success story earlier. Give us a darker side story. Give us one of the nitty gritty. Again, with some personally identifiable detail, if possible. Someone who came across the MTM threshold and they just stunk it up, and it was mostly because of psychological issues.
I'm going to give you two. All right. The first one, and I'll be brief with the first one. The first one, I was talking with somebody just yesterday who is like getting started as an investor. And this person, was looking at making this trade and would talk about every single thing that could go wrong. What if, the technical level doesn't hold? Well, it might not, but, there's better than not chance it will. What if the CFO is cooking the books? Well, it could happen. There was an insider who sold 10,000 shares 3 years ago. If you focus on all those negative things, you're never going to make a trade. And B, if you do, you're going to trade with such fear, you're not going to make it work. And the other story is kind of near and dear to our hearts. I think I followed up with you on this one. There was a listener who wrote in, I think he wrote into you, if I'm not mistaken, and said, "Hey, man, I got problems. I got to talk to somebody." And you passed them along to me, and he lost, I want to say like $700,000, over half his life savings, trading. And I was like, he said this in an email. I'm like, all right, look, it's Sunday night. Call me right now. And so I got on the phone with him. I was like, okay, what's going on? Let's talk about this. And he had all these positions, and they were all like, everything was messed up. And I'm like, look, man, there's a lot of layers to this onion. We're going to, but don't worry, we're going to fix this. Here, sign up for this one-on-one coaching class. We're getting used to, I'm moving my schedule. I'm personally going to work with you first thing tomorrow morning before the market opens. And he's like, Well, how much is it? And it's, in the big scheme of things, it's not all that expensive, especially compared to $700,000. But if it was $100,000, the answer should have been yes, right? It's not $100,000. It's nothing even remotely close to that. But it's just like, and he literally said, "Well, no, I'll try and figure it out myself. Thanks." It's like that is like, there's not a possible worse attitude than that. Like, and it doesn't have to be, me helping you. It just has to be like, look, like, I know that psychology is a big part of trading, and I don't sit and try and figure out how people's minds work. I read books on how people's minds work, because that's a big part of what trading is. I learn about it. I talk to people. I try and get better because somebody else already has the answer to the problems that you have, whether that problem's a $700,000 loss or the problem is I'm trying to get started.
It's another psychological trait. Everyone wants everything for free, right? They'll lose $700,000 and they expect noted podcast host, author, and everything else to drop everything you're doing on the weekend, no less, and fix everything for them completely for free. It's a strange mindset.
And like, it's really even not about the money, not for the person on my end trying to teach you, and give you his services. But it's not for the money on that person's end either. Like it's about being willing to invest in yourself, whether that's time or money or effort, like the guy who studied and paper traded for 6 months. It's like investing in yourself is where it all starts.
I said this is our epic trading psychology spectacular, and I think we probably will have to have more episodes on this because there is a lot to touch on here. I know we have some questions. I want to get to some of you folks. You folks have been popping off on us as well, as you love to do, and we love it here. We love your questions. Keep them coming at us here. So let's kind of just summarize what we talked about so far, and I think we'll be coming back to this topic as well. Obviously, psychology is a huge barrier. It can really separate the worst from the best traders. We highlighted some ways you can maybe help do a bit of an end run around that while you're developing your own psychological instincts and traits, hopefully healthy ones. First off, don't deal with that FOMO monster if you can. Ways around it. First off, set on rules at the outset of your trade. So you've done your analysis, you're comfortable getting out here, maybe going back to what we said earlier. If the trade works for you, you don't want to cut all your winners either. You want to let them run a little bit. So maybe you start scaling out at a certain level to the upside. And if it moves against you, you will agree to take it off. Not scale off, but probably take it off. People always ask us about adjusting or rolling. Usually the best bet is to take it off completely and live to fight another day. Be able to grapple with that. That's one of the hardest things for any trader to do. But the rules will help you get there. And the same thing with the notion of no one ever went broke taking a profit. Sounds simple. It sounds straightforward. You'd be amazed how difficult it is for people to actually master that concept of the entirety almost of this meme stock bonanza. You could argue a lot of the crypto going on out there right now. It's all based around this. People are terrified of missing out. And so they refuse to take anything off. So be willing to scale and take some profits. You will not go broke. And maybe you will miss some upside, but you will usually, I can almost guarantee you will more often than not miss out on losers. And you will be thankful that you did that rather than the opposite. So Dan, again, this is kind of like, I guess we can call it our epic trader psychology spectacular part one, because I'm sure we'll have questions. There'll be more to come back to this and we'll think about more topics for this. But let's leave them with another helpful piece of advice. If someone's coming into this show right now, and there are a lot of listeners, new people discover this show every week. A lot of them are brand new to the world of options. If you had to give someone some trading psychology advice who's kind of just coming into the biz now for the first time, what would it be?
Be excited. I mean, look, you can, and I don't like to talk too much about the financial aspects of trading, which is sort of ironic because in some ways that's what it's about, but I feel like it's the least important part of it. But you can make a lot of money being a trader. I've got a lot of students who, some of them have showed me their P&L statements. Like, it is very, very possible. But it's not necessary to focus on the money. What it's necessary to focus on is the things we talked about: taking action, investing in yourself, having that positive attitude, and just being steadfast and making it happen. be excited, because it is an exciting thing. It's it's a fun job, hobby, side hustle, whatever it is you want to call it. It's basically all I did since I was 22 years old, and I would not have it any other way.
Yeah, you're right. We don't really focus on the profit potential or profit aspect of trading that much here on the network as well. Obviously, it's an important one. That's why people do it. But there are many other assets. People have asked us on this show many times, should I consider a career in this? One of the things that attracted me to it and attracts a lot of people to it is kind of the open meritocracy nature of it. There's no different layers of hierarchy and stratification. You come in and however good you are, that's pretty much what you are. There's no other layers to this nonsense. You have your P&L at the end of the day, and that's effectively how good you are as a trader. And there's no other layers or really different shades of it, which it makes it, I think, appealing for a lot of people. And certainly the money side isn't bad either. But there are other many psychological benefits and rewards to doing this that people sometimes overlook when they're getting into this. But we know we're not going to overlook. It's your slew of questions. Let's see if we can squeeze a few of you on with a real quick mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's do it, listeners. Mail call time. By the way, if you're listening live or actually after the fact, you should have a chance to play as well. We got a hot and heavy poll right now. You guys have been bugging us for a while. Bring back the polls on Twitter. Bring back the polls on Twitter. So we did it, and we got a hot and heavy one out there right now. We asked you guys, play along with us on the Volatility Views show, which, by the way, if you're listening to this show only, not listening to Volatility Views, you're missing out. But that's a conversation for another day. That's every Friday, noon Central, 1 p.m. Eastern, live after the fact, whenever you want to listen to it. We said, hey, it's time for you guys to break out your crystal ball. Join us on the Vol View show. We make a prognostication. Guess where VIX will be at the end of this week. And Dan, we gave him 4 choices, as you do on Twitter. We gave him below 16, so they have the entirety of below 16. We gave him 16 to 17.5, which was where VIX cash was when we posted that poll. 17.5 pretty much to 19, or above 19. And right now, Dan, which is fascinating, this is almost exactly evenly split with pretty much almost exactly 25% for each. This is fascinating to me. This shows there is quite a market out there for vol, sir.
Yeah, very interesting results. Very, very well distributed.
Yeah, that just shows why maybe vol is so strange right now. Everyone's got a different opinion on it, which is fascinating. I can't remember the last time we had a poll be this evenly distributed out there. And this has been going for a day or so too. So it's got a fair number of votes already in it. And people are just kind of all over the place. So A, if you haven't made up your mind and you want to vent your spleen on vol, go to @options on Twitter, make your voice heard. And B, this is just fascinating to me. This kind of shows me maybe we're going to be in this range for a little bit because people are all over the place when it comes to where VIX should be, even at the end. I'm not talking the month or 6 months or a year, just the end of this week, which is interesting to me. All right, let's go out to the pro members. You folks get bumped to the top of the line. I see you're actually in the chat there, P&L Man. Good to see you in there on the live there again. P&L Man has a question, Dan. He says, I have been selling covered calls on KRE. If you're not familiar with this, listeners, this is the Spider Regional Banking ETF, ticker symbol, like I said, KRE. It's trading right now $66.72. We know the financials have been doing pretty well, and this name has been doing pretty well as well. A year ago, it was trading $41, up to about 66 3/4, like we said right now, so up about 62% on the year. He got as high as, looks like, about $73, looks like into June. So topped out at about 73, and it's still pretty darn close to that. So I could see why maybe you're having some issues with your covered calls there, P&L Man. P&L Man says, I've been selling covered calls on KRE, and last Friday, the underlying got called away during that crazy upside jump in the 10-year note. Let's see. Thursday, it was trading $63 out here. On Friday, it was trading $66. So I'm going to guess you had maybe a 65 strike call there, Mr. P&L Man. It says, I want to reestablish my position. So which of the following do you recommend? 1, try to buy in at the same price, or 2, sell a put at the same strike price, or 3, try to make a little profit by selling an out of the money puts. Oh, so I guess he means number 2 is selling at the money put. So 66, and then you're probably definitely going to get the stock. So that's interesting. It sounds like you want to get back in. So Dan, this is an interesting kind of flipping of the script. We've had questions before about when I should roll my covered calls. His covered call, his stock got called away, so he's already through his strike, which, by the way, we've said it before, going back to psychology. I want to stress this again. If you sell a covered call and your stock gets called away, that's a winner. You win. You should be happy. So congratulations to you, P&L Man. Again, this goes back to never got broke taking a profit. You made money on this, so be happy. But Mr. Dan, what are your thoughts here for P&L Man? Everyone else out there who's got an underlying, maybe gets called away and it's hovering in that range. How do you recommend they get back in? He wants to know, let's see, what was the options again? Oh, just buy the stock, sell the at the money put, or an out of the money put, maybe turn it into a little bit of a wheel candidate.
Mm-hmm. So the one little phrase in his question that I'm focusing on is he said, I want to reestablish my position. So which of the following you recommend? So to me, that rules out choice 3 to try and make a little profit by selling an out of the money put. Like that is not congruent with your objective. If you want to reestablish your position, why tinker around and try and make 50 cents when apparently if you want to own the shares, you think it might go significantly higher. And I'm looking at a chart of it right now, and it had a really good run, a little bit of a pullback over the last 2 months, but busting out through the 20-day moving average and the 50-day moving average over the last week and a half. So if you want to reestablish your position, choice 3 should not even be on the table. You can buy in at the same price. I suspect you would end up doing a covered call if you did. And so what I say to that is, why mess around too? Why not just sell a cash secured put at, when you say the same price, I mean, it doesn't have to be the price you got called away. I probably wouldn't do it too far out of the money. When I find myself in situations like these, I'll sell one just slightly in the money where it has a lot of meaty premium to it, so that if it does go up a fair amount, I capture a lot of that move. And if it goes down a lot, I'm still buying at a discount, which is, unless it shoots up a ton, either is better than buying the stock. So I feel like, and I'm hoping not reading too much into your question, but I feel like if you want to reestablish your position, selling a cash secured put, probably like right at the money or just a teeny bit in the money, it meets your objectives the best.
Yeah, I kind of highlighted that line in the question as well. He clearly wants to get back in. And I'm with you. People, if you're going to buy the stock and then turn around and then sell a covered call against it, synthetically, you are doing a cash secured put effectively, even if you don't realize that you are. So if you're going to do that anyway, you may as well avoid the hassle and everything else. Sell that put. I think Dan's suggestion of maybe going a little bit in the money isn't the worst. I just pulled up KRE. It's not a name I watch regularly here. I pulled it up just to see what kind of juice you're looking at here, what kind of premium levels here. And like I said, it's at about a 66 3/4. So if you did a 67 put, which is again in the money by about 30 cents, you're getting $1.25 for that. That's going out to regular AUG expiration. So you've got effectively 9 days left on that bad boy. You're getting $1.25. So you're getting a decent amount of juice. I can't see what level of vol that is right here. Unfortunately, my platform here won't pull that up for me. But in general, that's a decent level of juice, and it's not that far away, so you can always reassert, go back out. And if you do get the stock put to you, then you can turn around. One of our other favorite strategies is the wheel. You have the wheel again, so you can come around again and look at, again, some of these upside calls. Maybe you go out to September this time or something along those lines, and you do something near dated again, and you keep wheeling in and out of that stock. That is by no means a bad trade. People do that all the time. Uncle Mike on our option block program, he kind of lives by the wheel out there. So there are people out there who do nothing but this. They sell puts to get into underlying, and then they identify a level where they wouldn't mind getting out, and they sell a call against it. They get paid to get in and get out, rinse and repeat. It's a great strategy. So again, yeah, I think that's a great bit of advice. If you do like this underlying, and it sounds like you do, then that's a great way to go. Great question there, P&L man. Let's see if we can squeeze in a few more, Dan, because we like the people out here. Here's Joe Leska. I haven't talked to him in a long time out there. He was commenting on our last show, 146. He said, what other program sends their loyal listeners a freaking treatise, let alone an epic tome? Well, yes, Joe, you are correct. We are willing to go above and beyond for our listeners. In fact, I'll have to see what they chose for their epic educational tome in their trading crate. So there you go, Dan. Joe likes the fact that we send our listeners not just treatises, but epic tomes.
Yes, Joe is great. In fact, Joe is so great that he actually works with some of our one-on-one coaching students. We look for the best, and Joe is definitely one of them.
Oh, well, there you go. I didn't know that. So there you go. Joe getting into the MTM family here. What do you think, Dan? You got one more in you?
Yeah, let's do it, man.
All right, here we go. This is, again, we'll follow up on a listener from last week, which, by the way, I was worried that I butchered his name. His name was Chinggis Akateyev, and he wrote in to say I nailed it. So thank you, Chinggis. I love the name, too, Chinggis Khan. Obviously, Genghis Khan, a.k.a. Temujin. Many different names for good old Chinggis out there. But he wrote in last week, and he had questions about directing the open interest and how that affects the stock price. And he also had pointers on how to identify the direction based on the OI. So obviously looking at, where size OI is lining up and if that indicates some sort of direction in the underlying. We kind of said, hey, interesting question, but maybe provide a little bit more clarification on what it is you're actually asking. And so he followed up, Dan, with a meaty clarification. He said, thank you for covering my question on the last release. To clarify what I meant by direction, how to identify the direction of the price movement on the underlying based on the OI and evidently other tools. But you have covered it that it is not guaranteed for that move up, down, or neutral. But would the stock price move in one or the other direction if option writers want to make it move in that direction, i.e. if market makers and or large traders wrote calls, then they will drive the stock price down by selling pressure to make sure options will expire worthlessly. Or another example, market makers and or large traders wrote puts, making them obligated to buy shares if these options expire in the money or deep in the money. Will buying these shares drive the stock price higher? I tried to unpack my question further. Hope this clarifies it. If not, I'm going back to the drawing board. No, you did. You clarified it well. So he's talking about what kind of gets bandied about in the media a lot. They tie different names to it. Some people call it max pain or kind of the expiration/gamma effect of these strikes. But he's right. If there is a size position on a strike and that kind of dwarfs everything else on it, and let's say, the market makers are size short this or vice versa, size long on a particular strike, that will have an impact on the underlying if it's hovering around that level close to expiration. I sometimes think this gets overplayed a bit in the media, this gamma, the magical power of options gamma to just suck an underlying to a strike and pin it. But there is some impact to it, Dan. So what do you have to say here for Chinggis and his question about effectively size OI and how much impact it can really have on the underlying?
Well, I've been doing quite a bit with open interest lately. And I've spent about 12 years before this past year telling people just to stay away from it because I've seen so many people think they're reading something into it, but not getting the whole story and losing money because of it. You can glean a whole bunch of great information from open interest, but there's so much more to the story. It's, open interest is how many contracts are out there. You want to see when the volume happens, if it's opening or closing, if it's buying or selling, if it's part of a spread. And, there was one thing, there was one thing that you said, that Chinggis said, where is it? If market makers or other large traders wrote calls, wait a minute. Oh, no. But would the stock price move in one direction or the other if option writers want to make it move in that direction? So, look, if somebody, by writing calls, it's not that you want to make it move in that direction. I mean, yeah, like in your mind, the trade works if it moves in that direction, but no one can will a stock in that direction. So that's not the goal of open interest. It's not like I'm putting on this trade in order to move the market. I don't think anybody's big enough to move the market. I guess I'm still answering a little bit general just because this is one of those extremely long questions. So to pick out, to answer the whole thing, I probably need a good hour and, an open Word doc in 2,000 words. So just general advice, know that nobody's controlling the market. The max pain thing that Mark mentioned is super oversimplified. I just tell people, anybody who talks about max pain is just amateur hack. It's so much more advanced than just what they make it out to be. Look at volume. Look at if it's opening or closing. Look at if it's buying or selling. look at if it's part of a spread, and then know that 7 times out of 10, that person's going to be wrong too. Because some of the open interest that I look at is people buying these way out of the money options. And I look at it and they'll buy them for like 10 cents, but they could have bought like 3 strikes lower also for 10 cents. And it's like, wow, like this person obviously doesn't know what they're doing. I'm not going to follow this trade. So, I mean, I hope that helps. There's just like, there's a lot of parts to this question. So I hope being general was helpful.
Yeah, this is a lot to unpack. Maybe we can come back to this, Dan, in a future episode as well. Kind of just bust some myths. We have touched on this before, but clearly maybe it's time to revisit this, especially in the wake of the meme stock madness. A lot of people were talking early on about the gamma effect on the early days of GameStop, how busting through all those short strikes that the market makers have and market makers had to buy stock, it ended up being just adding fuel to the fire and driving GameStop higher. But this is kind of those are aberrant scenarios. These are, what you're talking about here is, like Dan mentioned, much more straightforward. And again, it gets overplayed a lot in the media, Max Payne, whatever you want to call it out there, these concepts. What you're talking about, and if you're not familiar with these listeners, effectively, if you have a large open interest strike, if the market makers are long that at the end of the day, they had to buy this. That means they're long gamma. If you don't know what that is, check out Dan's book, Trading Options Greeks, or check out some of the early episodes of this show. And as you get very close to expiration, gamma tends to explode. And so what happens if the stock is hovering around that strike anyway, and it starts to drift a little bit above it, let's say market makers will get long shares, they will end up selling that to effectively delta hedge themselves. And that will usually maybe help to drive the stock back to the strike, or same thing if it drifts below it. Again, this is usually very close to expiration, and the magnetic sucking power of this is often very much overplayed. It's not going to suck a stock, 5 handles away from where it is to pin at a certain strike. No, but if the stock's hovering around there, it may help keep it glued there right in the final hours of expiration. If there's short gamma, it's going to be kind of a bit of the opposite there if they start moving towards that strike right toward expiration. But again, this stuff tends to get overplayed. It kind of gets put into this kind of the whole magical, fantastical elements that are often attributed to options out there, how they're the most dangerous things, or they cause the 87 crash, or they have these magical powers to move markets. Often they are not the case. And what impact there is often dramatically overdone. But it's a great question, Chingus. Maybe it's worth us revisiting on a future show. Unfortunately, that's going to do it now we went long anyway because we had so much fun with your questions. Your questions are great. Keep them coming. Hope you enjoyed probably part 1 really of our epic trader psychology spectacular. You guys listen to this, you think about it, what works for your own trading, what doesn't, what maybe some psychological issues that you've encountered while you're trading. Send them to us, hit us up, and maybe we'll work that into our part 2 of trader psychology, because there is a lot to unpack here, far more than you could do in just a single episode. But before we go, Dan, if folks have questions about trader psychology, maybe they want to just talk about, they want to get away from all this, they want to talk about earnings, trading, or meme stocks, or whatever the heck it is, where should they go? What should they do?
Come on in. The water's fine. You're welcome anytime to markettaker.com. You can join free and ask us questions in our chat room, share trade ideas, and become part of the greatest trader community on earth.
It may be, except for the cool secret club that they're in right now. That is, of course, infinitely better. But hey, who am I to say such things? Check it out, markettaker.com. 2 T's is the place to go. So when you're not listening to our stuff, you get on over to Dan's cool community there. And of course, it is Education Wednesday. I mentioned Brian is traveling. I was hoping to kind of be a jerk and drag him away from his vacation to do a live episode for you folks, but I decided against it, not to be the jerk. So Brian's going to still enjoy his vacation. You're going to get a fun on-demand best of for OPR later today, so look forward to that. Back again live tomorrow with episode 2 of the Option Block at noon Central, followed by, of course, TWIFO. Maybe able to do it a little bit sooner tomorrow. Maybe we'll do it right after. Depends on how things set up with Option Block. But we'll have TWIFO right after that. And then Friday, of course, Vol Views, noon Central, followed for all you Secret Club members by Options Oddities at 2 p.m. Central. Then back again next Education Wednesday for another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.